Hello everyone, good morning and welcome to today's morning report on Tuesday the 6th of October with me, Rich Perry, market analyst at Hand Tech Markets. European trading session just got off to a slightly weaker start really. There wasn't much driving the little correction that we've seen today. We've actually had some pretty strong sentiment out across markets since this payrolls report, or the reaction following on from the payrolls report. And it's interesting that we're now seeing a little bit of a slight correction. You've got this decline in volatility, which generally accompanies this improvement in sentiment, and we've actually seen Wall Street, or the S&P 500, closing higher 5 days in a row. Now that hasn't actually been seen since December, so that is an impressive run that the market has been on. But European markets today just slightly off the top, and I said in my morning report that I've been looking at the Treasury yields. Here we see the 10-year Treasury yield. We had this sharp decline on Friday and then a rebound, and pretty much all of that move in the initial reaction to the payrolls report on Friday has been retraced now on the 10-year. But still you can tell that this is in a big downtrend. So across the last 3 weeks, big downtrend, which would suggest that still this could just simply be a bear market rally. So we need to be a little bit cautious about chasing this one too far higher. I've got the DAX as my chart of the day, and I'll talk you through that in a bit, but certainly at the moment it's been a bit of a consolidation, if not a little bit of a correction, starting to fill in this morning, as there's been a slight shift in sentiment once again. So that seems to be the case in terms of equity markets, but in terms of Forex, we're seeing a bit of a consolidation really, not too much direction coming through yet. Little bit of dollar weakness today as euro started to gain a bit. Yen has also started to gain once more. So I'll talk through those charts when I do them specifically in a bit, but certainly at the moment there's a very slight move towards, away from the dollar. Aussie dollar also is gaining. The RBA didn't cut rates today, although there is an expectation that they probably will cut a further 25 basis points probably by the end of the year. But at the moment the Aussie has gained on the back of that standing pat on by the RBA. Now, what have we got to look forward to today? Well, there's not a great deal of economic announcements. We've got, we've just had the Swiss inflation data. It's still in deflation by 1.4% on the annual basis. But later on this afternoon, we've got the US trade balance. International trade expected to widen actually on the deficit to $47 billion. So that would be once again back at levels that sort of pretty much sort of at not record levels, but levels that we haven't really seen since certainly March, but also January on average it's much higher than that. So that wouldn't necessarily be dollar positive at all, and certainly exactly how the makeup of that trade balance is depending on how it affects sentiment, but certainly that is not likely to be particularly dollar supportive today if that is the case. So that takes me on to my chart of the day, which is the DAX. Now we've had this rebound in markets since Friday, and it's actually now broken a downtrend on the DAX. And look at this again, the Fibonacci levels. I've talked about Fib levels on DAX time and time again. Now 76.4 at 93.08. Again, pretty much caught that August low within a few ticks, about 30 ticks. Again, hit that low that we saw at the end of September and rebounded. So we're now looking up towards the 61.8% level, which is 98.97. Now that is the immediate resistance, and that actually, if you see on the hourly chart, if I zoom out slightly, you can see that there is a resistance band up towards 10,000 as well. So pretty much sort of 100 ticks worth of resistance there between 9,900 and 10,000 on the DAX. So that's to be aware. But look here, as we've seen over the last few days, we've got this RSI, which I think shows this sort of pretty truncated, choppy, up-down series of moves, and the RSI getting back towards that 60 point, which seems to be sort of capping the moves to the upside. But you do have this slight sort of improvement in the MACD, and I think that would suggest you are still in a sort of an improving outlook, slightly improving outlook, because you've got these momentum indicators that are finding lows at higher levels. But just immediately we've had this crossover, about to get a crossover sell signal confirmation on the stochastics. So that would suggest certainly not chasing it. It could well be that the DAX unwinds back to close that gap that we saw late from Friday. 95.68 is that gap. But yesterday's low also at 96.47 is a support as well. So we need to sort of bear in mind that it could well come back to that. Gaps do tend to be filled, as we can see on this chart. The gaps up tend to be filled, so that could well be the next move, where we come back towards this sort of 95, 96 area. But then with this improvement in momentum across the hourly chart, maybe that would be around about where we'd see the next buy signal coming through, if this is indeed an improving outlook, and this sort of broken downtrend is a trigger signal for sort of further improvement. That RSI on the daily chart is also improving. You've had a buy signal confirmation on the stochastics, so generally speaking I think we're looking more positive than we have been for a while on the DAX. It's just as to how far this little mini correction goes today. So I wish you good luck in your trading on DAX today, and I will speak to you later. Thank you.